Hello and welcome to another BeeBusinessBee video. Now this video is a little bit different because I've come into town in the wonderful gardens at the moment, but I'm not here to talk to you about the wonderful gardens. I'm here to talk to you about one of the most popular questions I get when we talk about personal finance. And the question that I always get asked is, what is the difference between one of these and one of these? Well, the main difference between a bank is that it's owned by shareholders. So anybody can buy a share in a bank, and banks aim to make a profit for those shareholders. Their shareholders may not be just the customers like you find in a building society. That's a typical difference that you find in a bank. In addition to that, banks tend to offer a wider range of financial products. So they offer savings accounts, current accounts, maybe investments, much wider range of products in a building society, and they tend to offer you the ability to do banking in different places. So you can do it online, for example, you can do it in the branch, you maybe do it mobile, telephone. They're main advantages of a bank. In addition to that, you tend to find they've got more branches. So you probably recognise this brand of bank. They've got branches all over the UK, you can go anywhere you want, whereas the building society we looked at tends to be quite local, so that's a drawback of being a building society. But of course, banks lack that personal touch that you might find in a building society, hence why some people choose a building society rather than a bank. All different factors to consider, but that's the main difference between a bank and a building society. So, a building society, what is the difference here? Well, the main difference here is they tend to be owned by the members. So the members get an equal say, an equal share of how the business is run. For example, they get an equal share of the profits that the building society makes. Not only that, on top of that, they tend to offer better deals and better rates because the members are the customers, and as a result of that, they tend to offer them good deals. Building societies tend to be smaller than banks, so they don't tend to have as many locations. They don't also offer as many financial packages, but on the other hand, building societies tend to be much better if you want to meet local needs. So for example, they do traditional forms of banking. If you're a customer who wants to go in, for example, you don't want to do online banking, you tend to find that advantage happens within branching building societies. On top of that, you'll tend to find that building societies don't have online banking. They don't have some of the other methods of banking that you find in other banks. But building societies are local, they're popular, and they're also a way that you maybe can get better deals and have a better say, and they look after their customer in more detail. Thank you for joining me in this video. Hopefully I've now explained to you the difference between a bank and a building society. Don't forget to follow me on Twitter, it's at BeeBusinessBee, on Instagram at BeeBusinessBee, on Facebook /BeeBusinessBee, and most importantly, don't forget to hit that subs button down at the bottom for me as well. And you know what I'm going to say now. Until next time, make sure you keep buzzing. Thanks for joining me in this BeeBusinessBee video. Don't forget to follow me on Facebook, follow me on Twitter, follow me on Instagram, and make sure you click that subscribe button down below, because you know you want to be buzzing for business.